having me at the Abuja International Housing Show. And what I will do is a presentation on investing in resilient cities and sustainable communities, which will form the backdrop of our discussion as to what we are as an organization, the work we do with the Fuller Foundation in Nigeria, and the wider affordable housing sector. And I will share my screen to start the presentation. So, REAL, what are we? REAL is an innovator and investor in affordable housing in Africa and Asia. And probably the best way to summarize what we do is our focus. And our focus is around three key parts. The first one I briefly touched on is our focus on urban Africa and Asia. The second part is our focus on delivering climate-smart, affordable housing. The third part is our focus in a particular segment of end beneficiary, the bottom 40% of the income pyramid. So these three elements are the key where we approach our work. Now, in terms of strategy, we have a two-pronged approach. The first one focusing on the build. And the build is essentially a program of investment into tangible assets to deliver climate-smart quality housing that developers can then sell. And the way we do that is by providing blended finance, largely debt, equity, sometimes grant, and other financial instruments that we feel are relevant for that particular strategy. The second part is looking at the wider market, and in our world, that's what we call broker. And it's a recognition that the affordable housing markets need initiatives beyond the building of tangible assets. And the brokering can take different aspects. The first one is around end user financing. The second one is about working with policymakers, with regulators to influence the structure around the laws to make investing in affordable housing much more easy. A third part that I can mention is all the data and evidence and the proof of concept that the tangible work has achieved as a way of attracting others to move into the affordable housing sector as well. And as far as we are concerned, we believe that this is the right way of approaching a sector that's largely untapped at the moment. And I'll go back to that in the third part of my presentation. So in a nutshell, that's what REAL does: invest and innovate to put the affordable housing sector at the forefront of many ecosystems in urban Africa and Asia. Now, having spoken to what we do as an organization, I will now focus our partnership with the Fuller Foundation in Nigeria. And probably some of you might be asking yourselves how we've partnered with them and what is the reason why we've been working with the Fuller Foundation. So how we partnered with the Fuller Foundation, we started working with them in 2014, and really along the same model that I mentioned a few minutes ago, i.e. providing blended financing, debt, grant. And over that period of time, we've invested over $5 million US, which has delivered more than 500 housing units. And while we worked with the Fuller Foundation, it is a recognized developer with a credible track record in the affordable housing segment, and one of the very few that can deliver at large scale in that segment. And it's not just me or REAL referencing that, it's also the wider market, be it in Nigeria or in the continent. And in Nigeria, Abuja International Housing Show recognized the Fuller Foundation as the most affordable housing project in 3 consecutive years. And on the continent in 2019, the Center for Affordable Housing Finance in Africa awarded MFF the prize for the most affordable housing house produced by a private developer in Africa. And again, this forms a very credible backdrop for us to be working with the Fuller Foundation and to be continuing supporting them in the foreseeable future to expand in that particular program. Now, on the real structure and what we do, I've touched on the Fuller Foundation and our partnership in Nigeria and what it has delivered and the logic behind it. What I'll now do is to briefly talk about the wider affordable housing market and why we believe it's now is an untapped market, and the value of it is around 17 trillion US dollars. And the reason why that market remains largely untapped has multiple elements. One of it being the lack of construction finance for developers to be building at scale in that segment, amount of housing units. So much so that at this point, there are very few developers addressing the demand, and there are also limited proven cost-effective construction technology that will allow the development of affordable housing units. And then the final point on that untapped market is the fact that it is a gateway to 16 of the 17 Sustainable Development Goals. And that just speaks to how critical that sector is, not just in the context of the COVID-19 and how important it is to have housing and how important it is to have decent sanitation and solution to water, but the wider perspective about socio-economic development, about job creation, about asset creation, and the affordable housing segment addresses all these different points and beyond in terms of making sure that health conditions improve, in terms of making sure that education for the younger generation is also at a distant level. I will stop here. Thank you for listening to me. The final point that I will make is that affordable housing is a critical element in the wider ecosystem, and that addressing it, as I briefly touched on, allows different, will create impact in housing, not just in housing, but economy, health, and education. Thank you.
Thank you very much, Patrick. I think if we're addressing 16 of the 17 issues, I think we are moving closer to having the final solution. But I was just saying thank you to Patrick and say if he's addressing 16 of the 17 issues surrounding the affordable housing, then we are moving closer to be able to solve the problem. And I think here the issue of the foundations, working on housing, comes out very critically in his presentation. And I hope that people can react to that to see how this, we can expand that sphere, to the ordinary person. Let's now have Mr. Thank you.
When we are talking about the issues and how we can, at least, we must come up with innovative way. And of course, to do the innovative way, we as CEO of 117 Capital, Securities and Exchange Commission licensed fund management company, we've decided to come and be a bias in terms of the financing activities that we do. And the biasness we do is we decided to strictly rely on non-interest financing. And of course, non-interest financing is more of innovations of many things that you do, not just a straitjacket of a loan that is usually being done in a conventional way. And of course, because we were contacted by many real estate developers, being naturally the product that is fit into the non-interest financing, we were contacted by many real estate developers. Of course, one of the real estate developer approached us that he is in need of acquiring a land along the airport road and also to provide about 5,000 houses to the Nigerian Immigration Services. Immediately, because of the impact we know it is going to provide in terms of the economic activities, in terms of the social activities, and so many other factors, we've decided to jump at it immediately and said, yes, we count us in, we will come and do everything possible to see how we can finance it. And therefore, we've decided to structure the usual way of how you do financing in non-interest finance through a sukuk. And of course, we structure a sukuk thanks to the natural activities that we are doing. We are also involved in family home sukuk that they've just concluded, where they came to raise 10 billion and they were able to raise 20 billion. They had to even return over 10 billion to unsuccessful subscribers. Because of that experience, we've decided to also come and say we can also do the same. We structure a sukuk with respect to this in two categories. First is to acquire the land in order to sell the land to the developer. And then second, the developer is also in need of the funding, not only the land. Therefore, we have to also provide the seed capital for the funding of that particular aspect. How do we do that? In line with the contracts of non-interest finance, we've decided to select two contracts. One is the contract that is called an istisna contract, which is the forward sales construction contract, where we've identified specifications of the houses that will be delivered in future, and we want the developer to deliver the houses to us at a price that we've agreed. That is the first contract. We've also decided to say, since we are not the one who contacted the Nigerian Immigration Services and other paramilitary officers that are also interested in these houses, it is the developer that has contracted it. We decided to use the developer as an agent also to sell the houses either in a lease contract or in whatever mortgage that's also Sharia compliant format to the Nigerian Immigration Service. And we are able to kickstart and set the ball rolling with respect to that. We are also involved in many other transactions, of which one of them is here by my right, Dr. Bashir Oshodi, who is the MD CEO of Trust Bank. He is into also the non-interest financing activities, and he is in need of raising 50 billion naira in a program of a sukuk, and we structure the sukuk and will soon hit the market in order to see how he can acquire more real estate that are going to be affordable. Of course, now that we know with respect to this particular forum very openly that we had Andrew, of course, the issue of Shelter Africa will knock your doors because of the impact we believe and the numbers that we believe. The structure is just the normal structure. It is called Sharia compliant, but it is the normal Sharia structure where we can do partnership, we can do leasing, we can do other things in conventional way that we know. So definitely count on us. We are going to knock your doors to see how we can partner to deliver many affordable houses to the Nigerian Immigration Services, as well as other paramilitary officers that are in need, as well as other stakeholders. We have the supply side and we have the demand side. With respect to the supply side, that is what I explained. With respect to the demand side, which is the off-takers that are interested, we also have an Ijara contract. We can always finance their needs when it comes, or a Murabaha contract, which if you knock those of Islamic finance, you always find this kind of contract that is being used in order to finance the off-takers of the houses in line with the mortgages they are doing, but of course, in a principle of non-interest finance. That is actually what we do, and I believe is something that based on this forum, we are going to make a lot of impact to the Nigerian real estate sector generally for the sake of financing the deficit that we have in the housing estate. Thank you so much for giving me the opportunity to talk about this particular housing deficit and issues. Thank you.
Thank you very much, Macedo. I think this is a new innovation. Non-interest financing is very new in Nigeria, but at least it's a very effective way of addressing the very effective way of addressing housing. I recall the question of the sukuk, which was launched a couple of to be able to work along with this sort of institution, more affordable housing. I think we now have our friend Bashir.
I was going to show some diagrams. Are you able to put up my slide, please? Okay. What I'll do very quickly is to show, next slide please. I'll just show 2-3 diagrams just to buttress further on what material talked about. Can you hear me scroll down, please? Just go on. One more. So basically, Atari has described non-interest finance, which is basically equity, debt, and if you like, agency contracts, right? We're going to be looking at how best to tweak the equity contracts in a manner that is workable, and how to tweak the debt contracts. Next slide, please. Okay, so he described an institutional contract. Institutional means construction sale. So let's look at it very practically. We want to build 100 units somewhere, Abuja, Lagos, Port Harcourt, wherever, and you have something on ground, it's debt. So under Islamic finance, money is interest, right? So we cannot give you money and earn more money, which is interest. But we can buy and sell, which is a form of debt. We can buy and lease, which is a form of debt, right? Now, how about if you owe us houses rather than money? So for example, we have a parallel system, which I already talked about. These are just 2 simple lines. One line is where there's an off-sale contract, if you like, off-take contract, right? It's okay. I'm buying 100 units. The builder becomes the off-taker. So on the one hand, we can look for 100 people to buy these houses. A lot of developers don't have that. I mean, I've been in banking for a while. If you ask for off-takers, they're going to say, no, we don't have off-takers now. But don't start building first. When they start to build, the off-takers will start to come because they're seeing the structure come up. Now, we can actually use that developer as the off-taker, if you like, a corporate off-take guarantee or undertaking in place. When you have that, it means Modern Charter, for example, as the off-taker, is one that will paying the bank back. That's one institutional contract, one build to other contract. The second one is then with the builder. So Modern Charter will then appoint ABC Construction to do the development. On the one hand, Modern Charter is the obligor and is the off-taker. So when Modern Charter starts to build, Modern Charter will then get a lot of off-takers that will be paying him in bit, and that money will be coming back to the bank. Now, that structure works perfectly well. Rather than have to wait for so many off-takers to come on day one, which is very, very difficult practically, we just simply structure parallel system, right? It can be, we've done a lot of this. This year alone, I've done at least 6 billion worth of that. Just 2 transactions, 200, well, let's just say 3 transactions. Next slide, please. Now, in this case, let's look at equity partnership. Now, partnership, so Islamic banks or no-interest financial institutions can engage in business directly. You don't have to wait for clients to come. So if a client doesn't walk up to you, you can do the business yourself. So as a non-interest financial institution, because we usually have problems of excess liquidity most of the time, there's excess cash in our position. And there's nothing to do with it. You cannot buy T-bills, you can't buy bonds, you can't buy interest-bearing instruments. So what that then means that you can just create an SPV or go into partnership with another company, with any developer. You'll be the JV partner. You're bringing the cash, right? You're the JV, but the other person brings land. Now, that's the first line there. The second line is where there's an agent in between. Now, that can frustrate the deal sometimes, right? But can be interesting. So the agent says, oh, I'm bringing the bank together, I'm bringing the owner of the land. And the agent wants commission on the land on the one hand. On the other hand, he wants to be able to sell himself, and he also wants to, build. That can spoil the deal. I give a simple, by the time, practically, when we look at the cost of land, which should have been the cost of, most of the time, developers will overprice the land. By the time we do valuation, we'll realize that no, it can't be so much. Let us know the cost of land is 100 million. Premium, if you ask for premium, it spoils the show most of the time. But we can structure it based on what Otario talked about. We can do, you can buy part of the unit off plan, right? So that money can get to the developer, or rather, to the owner of the land, right? That's the 10 million there. Now, again, like I said, it can be a dish, but we can work it out sometimes. Now, cost of construction. Now, when developers come with cost of construction, it's always too high. By the time you plug in the cost of construction, you have a total cost of construction of 400 million with the cost of the land. You realize that many of them, everybody forgets the cost of funds. Everybody forgets that that money is not coming cheap, whether conventional or non-interest finance. That money comes at some cost, 10%, 20%, 25%, whatever, per annum. Now, by the time you inject the cost of fund, that's what you have in red. Again, like I said, the obligator forgets it completely. It spoils the entire transaction. You now realize that that project is not even viable, right? So on the one hand, we want to do equity. The first case is the best case scenario. The second case is fair enough. We have to work with that middleman there to see how we can, let him take little roles in the transaction so it doesn't spoil it. While the third case is where we're saying that we can't even do equity here because they're going to spoil the entire transaction. Let us simply create a debt scenario for you, right? Now, if I give you 25% per annum for a transaction, assuming it's 2 billion naira, you don't need 2 billion on day one. Why can't you structure it? Look at the blue part. We'll buy a few units. So assuming this transaction is 100 million, we'll buy 20 million worth of units off plan in month 1. By month 3, we'll buy another 20 million worth of units like that. So by month 12, we're buying another 20 million worth of funds over a 1-year period is reduced, right? That's worked perfectly well, right? Next slide. Now, look at what I've done here is to describe, right? Is where, practically, as we have 10 developers there, they need $1 billion naira each. If you go to the capital market, you're not going to survive it. You're not rated, you don't have proper books, you're not audited and all of that, right? Even when it's audited, you're not made profit because of tax issues, right? Practically. So in other words, we can as well say, let's put 10 developers together. Put everybody together. We put it together. Now bring a trustee. We give the trustee a lot of power. We create an SPV, non-operating SPV. The SPV is just a shell company, right? That's going to exist only for a period of time. And then the bank, trust bank actor, or the financial institution becomes the obligor, the real obligor. Because you're a financial institution, you can actually bring your big chest out and say you want to take all the stress that has to do with that facility, right? So for example, radar members, this is the easiest model. Radar models, put 10 of them together, do the structure for them, get a guarantor in place, and of course, we enhance the facility, and then that way, everything works out perfectly well. Now, this model is what I see as a future of consistent financing of real estate. Next slide, please. That's about my last slide. Now, let's look at this next slide. What we have done here is, on the one hand, create a sukuk structure that I talked about on the supply side to create housing, right? Like I described initially. But what we have done here is to make the SPV an operational SPV. So in some cases, you just throw away the trustee, give the trustee a few rows, just give the document to the trustee, but you make the SPV an operating SPV. However, I call it perpetual sukuk, or we call it perpetual sukuk. Perpetual sukuk is where you consistently raise sukuk, consistently. So every time you do 10 billion, you're done with the money, you raise another 10 billion, 3 months time, 5 months time, raise another 10 billion, like that, consistently. We call it perpetual sukuk. On the supply side. On the demand side, we make real estate to be like a commodity. No commodity. You buy right now, you sell immediately, 3 months. So we create off-plan mortgages or all sort of mortgages. So off-takers will be paying, again, in another form of sukuk structure, where money will be coming in all the time. When you have this model and you run it consistently, it's going to completely solve the housing market, with or without government. With government, it means that government can also do the same thing. Private sector can do the same thing. Now, developers can come into the pool, right, and go under the cover of a financial institution. So either you do operational SPV or non-operational SPV. I think I have 1 or 2 more slides, please. Yeah, 1 or 2 more slides. Okay, now, this is going to be my last one. There's another one, but let me just stop here. And let's assume that NMRC, for example, wants to give cash, wants to refinance mortgages. So, yes, NMRC has been there, done a lot of great works. I used to be at Sterling Bank, we had financed 3 billion, 5 billion worth of mortgages, very conveniently. Now, there are not enough mortgages in the market. So, practically, NMRC we struggle to get more mortgages to refinance for a very short period of time. However, I can have a long-term plan to say, okay, you know what? Let us go to a conventional bank that has a lot of mortgages on their table, right? Now, take their mortgages, refinance them, now unlend the money to Atari's company or my company, you know. When you unlend it, yeah, maybe have some LTV, loan to value ratio, maybe 80% or 90%, so that why you have to pay NMRC every month, you know, we take it from certain some part of the money that is set aside to meet up that obligation, right? Now, this money can then be invested in a sukuk structure, back to sukuk. You invest the entire money in a sukuk structure such that you know in this case the bank, you know, gets some kind of collateral. Yes, I know we'd like to bill everybody so we can get money, but in reality, what happens is that everybody wants a collateral. They want a bond. They want 120% of the value of the assets. You know. Now, if the bank says, "Give me collateral," what you simply do is that, hey, the money is with the assets, the title. They are all with the trustees. You can have a charge on that asset with the trustee, and that solves a lot of problem. Thank you.
Thank you very much. I think that's a very innovative idea, which I think we can look at very closely, because pulling the various developers together and being able to translate those assets, the houses, into financial assets, which can now be traded, becomes much easier. Because part of the problem we have today is not only that we don't have enough houses, but the structure to translate those physical assets into financial assets, which can now be traded. And I think that's the key problem which we have in the country today. If we are able, you know, to innovate ideas, have innovative ideas, you know, like what you have just said, I think that might be extremely helpful. So let's now perhaps listen to one of the developers who has practical experience in using all the traditional ways of financing, and see whether the innovative approach which we have which has been advocated, you know, can be of significant help.
Thank you very much. My name is Abdul Malik Mahdi, the MD of Modern Shelter Systems and Services. Before Modern Shelter, this were my bosses. So I'm here to tell the story from both sides of the divide, as it were. From the point of view of a banker who was part of developing all these products that Dr. Bashir has spoken about, from the advocacy point of view, trying to convince people that sukuk is something very realistic, talking to people about all these big Arabic terms, musharaka, istisna, you know, murabaha, what they are, to now being a developer that is actually using those products that the market has accepted. And over the last 8 years or so, especially in the past 3 years, we've used Islamic finance to produce, among other things, you know, Bryn Zahama City, when Dr. Bashir was in Sterling Bank. We built, right now we have over 2,000 houses standing there. And it started with financing from Sterling Bank, non-interest, when he was the managing director there. We've done over 20 billion of Islamic products also with Jais Bank. We're building the biggest market in sub-Saharan Africa. It's a project that we're part of in Kano, which is the Kano Economic City. This was also a project that Modern Shelter advised and helped to build the transaction, as it were. We also have seen that Islamic finance is also helping in affordable housing. Recently, I think last year, just before the COVID crisis and even during the COVID crisis, Inverness Wealth Management in Abuja and Cardinal Stone, these are two SEC organizations, SEC registered organizations, we're able to convince them through advocacy that, look, why don't you guys try an Islamic product? Why don't you give us money based on Islamic finance? We build affordable houses. We've used about 1,200 houses are standing now in the bungalow city at affordable rates for FMBN clients. FMBN has come in to refinance these funds, and the investors are going to be paid by the end of this month. What we have seen is that developers, of course, need to show capacity in all this, and we need to be very transparent. You need to have integrity, and we need to be willing to share, because the profit is all about profit sharing and partnerships in Islamic finance. And if you're doing profit sharing, it's quite different from a loan. The bank is more invested, or the financial institution, as it were, because like 117, for example, is not a bank. It's a non-interest, non-bank financial institution. So they're also playing very heavily in that space. So they are very invested in the project because they are partners. The project management perspective is very, very strong, unlike a conventional loan. And so the developers need to be, they need to be able to share more of the profits that they make. And that way, investors are always happy. And when the sukuk comes on the market, you see that they are always oversubscribed. So with this new innovation that Dr. Bashir is talking to Raydan about, perpetual sukuks, putting together a lot of companies coming together to take a sukuk instead of going as individuals. Because as it is today, if you are going to do a sukuk alone, it takes a lot of corporate governance, which a lot of us are still struggling with, accounting, rating. There are a lot of things involved for you to go to the market alone. But if we come together, cooperate as a group under the leadership of organizations such as Raydan, with the help of institutions such as 117 Capital, Trust Bank, Auto, Jais Bank, Taj Bank, all the other players around, and the other non-bank financial institutions, and indeed even pure players, because there are some are not just Islamic finance oriented. I mean, the good thing about Islamic finance is that it's open to everyone. So you could have any SEC registered organization can decide, to get the necessary expertise and go into Islamic finance. So it's not restricted. It's not a restricted space. And we have seen even the federal government use the sukuk, to raise infrastructure funding for the roads all over the federation. So it's a very exciting time to be in real estate. That we have models, innovative methods of financing that I can sit here and tell you is very true as a beneficiary of Islamic finance. Somebody that has used the product both for commercial real estate, residential real estate, high-end real estate, affordable housing, for mortgages as well. So it is there for everyone, and I think we are beginning to see the beginning of a very explosive growth in the market for affordable housing in particular, with the use of Islamic finance as a model to finance it. Thank you.
Thank you very much. I think Islamic financing is very, very interesting, although new in the country. I believe non-interest funding is very active. I can recall that I was the first focal point for Islamic Development Bank in Nigeria, although I'm a Christian. I feel very concerned initially when we didn't understand what non-interest banking is all about. It's a question of trust, it's a question of commitment, it's a question of profit sharing. And this is very essential in even your own individual businesses. I can see that from our discussion today, that the non-interest banking is a new feature in financing housing, and I think this is a new innovation, which I believe with the SUKs, it can actually be expanded. But I believe somehow we have not had much on the traditional housing financing in Nigeria. What are the issues? What are the problems which we have during this COVID period? And after that, what do we have to do what are the innovations we need to introduce to be able to address it? Yes, what we have, what we discussed here, basically, they're okay. But I think we still need, some reaction on what are the problems which we have during this period in servicing the loans by not only the house owners, but even by your tenants. So I think this is an area where we'll be very glad to see if we have reactions, from the audience as to what innovative areas in the traditional housing financing that we can talk about. Anybody taking that? Yes.
Thank you. My name is Charles Nyangete. I'm just going to go back to Bashir will remember. Many years ago, we actually evolved the first uniform underwriting standards for a non-interest finance product. And I'd like to just understand whether or not you've absorbed those into standardizing this perpetual sukuk that you're proposing. The other aspect is that I heard the chairman say sometimes if you're a Christian and you support